Hey, what's going on, guys? In today's video, we're going to be talking about the best ways to invest your new $1,400 stimulus check. The government passed yet another massive stimulus deal to help speed up the economic recovery, and this includes things like unemployment benefits, educational funding, tax provisions, small business grants, and much more. But one of the main components that a lot of people are focused on are these $1,400 checks. And this time around, it's a little bit different. Anybody who makes less than $75,000, as well as married couples who make less than $150,000, are eligible to receive the full $1,400. And some of you might actually have already received a direct deposit, so let's get into the best way that you can invest that money to grow it as quickly as possible. And if you guys are new here, my name's Hunter, and I make new videos every single week about investing, trading, and personal finance, so consider subscribing to the channel. But what I want to hit on in this video are the top 3 sectors in the stock market that you guys could take a look at and potentially invest in. And then I want to explain why I see value in them and why I think they're likely going to perform very well in the next couple months. So the first step to trying to find stocks to trade, or really just investment ideas in general, is to identify the best sectors in the market. And then you can dive even deeper and look into those sectors to try to find some of the best stocks. For those of you who don't know, the stock market, or the S&P 500, are made up of these 11 different sectors like tech, healthcare, financials, consumer discretionary, communications, and so on. So every stock that's trading on the market will fall into one of these categories. And if you look at the market from this perspective over time, you will notice that certain sectors and certain stocks within that sector will outperform others based on current market and economic conditions. So I'll explain more of this and how you can identify the best sectors to invest in throughout the video, but I just wanted to start off by emphasizing the point that you should always be aware of what sector that the stocks you're investing in are in, and how these current market conditions can positively or negatively impact that sector just as a whole. But anyways, if you have followed any financial media outlet, you've probably heard the story of how interest rates are rising and how rising interest rates are bad for stocks, specifically tech stocks. And the NASDAQ at one point corrected nearly 12% as the fear of rising interest rates hit the market. But even though people might think that this is just bad for tech or growth stocks as a whole, there are some sectors in the market that this is actually good for. And one of the sectors that this has absolutely helped drive higher, and one that's been outperforming relative to the majority of the market, are the financials. And in an environment where interest rates rising are a big macro trend, meaning that it's going to have an effect on a large portion of the market, you want to be long in buying stocks within sectors that are positively affected by this. Interest rates have slowly been rising, and now they're really starting to pick up with both growth and inflation in the market, so you have to position your portfolio accordingly and make sure you're on the right side of this trade. And here's a chart that shows you how quickly interest rates have been rising over the past few months, and yes, they have been absolutely ripping, which has affected some stocks, but let's look at XLF, which is an ETF that tracks the financial sector. It has also ripped to new highs and will likely continue to hit new highs as interest rates keep moving higher. And if you did watch the Fed meeting earlier this week, you probably heard Fed Chair Jerome Powell say that their goal was to keep interest rates low and under control, but you also need to realize that most of what's said during meetings like that is just for whatever the people want to hear. Literally the day after that meeting took place, interest rates continued to climb, so you really can't just trade 100% based off what the Fed says. You need to look into the market and see what the market is really telling you through its different set of signals, and as of right now, that is that interest rates are going to continue to rise. So even though rates rising might scare some people out of tech stocks, these financial companies and financial stocks have done very well under these conditions, and XLF has actually just hit a new high earlier this week. And if you compare this ETF to the 10-year yield or interest rates, you can see how correlated they are. And XLF is just an ETF, which you could buy, but if you did want to just buy stocks, here are some of the stocks that account for 55% of this ETF. Some of the big ones are Berkshire Hathaway, JP Morgan, Bank of America, and then you can work down the list and find some smaller weighted stocks like BlackRock, Charles Schwab, and American Express. People always ask how to find stocks to invest in or where to go to find the best stocks to trade every day, and I really think this is the best way to do so. Step 1 would just be to be aware of the current market conditions and look at what's happening outside of just these stocks that you're trying to watch. Interest rates have been a very large driver in the market, so first you just have to acknowledge that. And then you got to go and look into how that affects different sectors. And then once you have identified the best sectors to invest in, you can go ahead and look for individual stocks to buy within that market. And looking at the bigger picture like this is a much better way to go about it than, say, using some random stock scanner and then investing in those stocks just because they fit the criteria that you plugged in. All right, so there's the first sector. The next sector on the list is one that I've actually talked about a lot on this channel in the past. If you've watched some of my other videos, you know that I am very bullish on energy stocks. And this is really for two reasons. The first is because of inflation, and the second one is because there are a lot of small cap energy companies that have huge upside around this entire reopening process. And one of the ticker symbols that tracks the energy sector to just show you the overall performance is XLE, and you can see that it has absolutely been crushing it so far this year, and I still think it has a lot of room to go. So far, this ETF is up like 25% year to date, and for an ETF, these are massive returns. This means that stocks, especially these smaller cap stocks within the index, are up a lot more than that. To put it into perspective, the S&P 500 is up like in between 4 and 5% year to date, so the energy sector has been a clear winner here. And yes, one of the main factors driving energy stocks to new highs here is having inflation run hot in the market. And this is another large trend that might scare some investors away, but you can definitely capitalize on it if you are investing in the energy sector. And I've personally been investing in some of these energy stocks for a while now. I think I even threw some of them in my either top stocks to watch in January or February video, but energy stocks have just been absolutely loving these market conditions and are really just leading the entire index. And just to be clear, I'm really just talking about the sector as a whole here. Obviously, not every stock is going to be a winner, but here are some of the heaviest weighted stocks in this index. So I definitely recommend going in and looking at some of these companies, especially if you prefer investing in a wide range of stocks. But just remember, with energy specifically, stocks with a smaller market cap are generally more volatile. So there is a great reward in play, but there's also a lot more risk in something that comes with investing in a $5 small cap energy stock compared to a massive mega cap like Chevron. And another thing that I want to mention on why energy has been such a good place to invest and will likely continue to be a good place to have your money over the next few months is because of the massive recovery that we've seen in this entire industry. What you'll notice, and this will take me into the last sector that I'm going to talk about today, is that stocks in the market that are outperforming right now are in some of these industries that were hit the hardest. Let's look at tech, for example. These companies were able to grow, and tech stocks led the majority of the first rally simply because a lot of these companies just weren't affected by the pandemic from a business perspective. Companies like Apple, Microsoft, Amazon, Tesla were able to make huge gains while the majority of the economy was getting nailed. But what we've been seeing really since the end of last year is a big rotation out of these growth stocks and into these smaller cap value stocks or travel stocks like airlines. And a lot of these small cap value stocks are financials and energy companies because these were companies that were hit hardest and have the largest margin to recover. When you look at, say, Tesla and Apple, you really just have to think, what do these kind of stocks have to recover from, right? Their businesses improved during the pandemic, so in the short term, what else do they have to improve on? And another big factor is that a lot of these tech stocks, everybody already owns. So it's very hard to get a massive wave of buyers coming into something that is already so widely held in the market. A lot of these stocks right now are what's referred to as a crowded trade because everybody already owns it. So when people start to rotate out of these stocks, they get hit extremely hard. But then on the other side of it, when people start moving their money from, say, Apple into these smaller cap financial stocks and energy stocks, those start to rip because everybody just transfers their money over and piles in at once. And that's really why the NASDAQ is underperforming right now, because a lot of the stocks in there just simply don't look as attractive to stocks like financials or energy or the other sector that I'll get into a little bit, because they don't have much room to grow compared to all the others. But I'm not saying go out and sell all your major tech stocks. Yes, obviously Apple and Tesla are going to continue to grow over time. I'm just pointing out what's happening in the market right now to hopefully give you another way to look at things. All right, and that brings us to the last sector that we're going to talk about today, which is the industrials. And just like the last two, the industrials have continued to hit new highs despite all of the recent market volatility and some pretty epic drawdowns in a lot of these stocks in the NASDAQ. And the industrial sector is also pretty interesting. It's one that you might not hear about all the time, but within this sector, you can find a nice mix of some large cap powerhouses like Cat, Honeywell, Union Pacific, that have just been absolutely bulletproof to any negative impact from inflation or interest rates rising. And then you have another component to the industrial sector like airlines, which have just been a huge reopening play. I've talked specifically about airline stocks that I like Spirit and American, but even though they've had a pretty good rally off of their lows, I don't think that it's over yet. And even though that you might think that a lot of these reopening trades are already priced in because we are in fact starting to reopen the economy and all the states are starting to slowly open up again, I think you'll be surprised. And I think that travel stocks are still not as widely owned as they should be when you compare it to other areas of the market that doesn't really have as much growth potential. Once we move into the summer and the majority of people who want to be vaccinated are vaccinated, I think that we'll really see travel numbers start to explode. They've already started to pick up, which is clear in how their stock prices have performed, but I think another massive leg up is likely to happen into the summer when more of these states start to reopen and people just start jumping and piling into these trades. And the industrial sector is just another great example of people moving into more value type stocks to try to outperform these mega cap tech stocks. But that's it for today. I wanted to keep this one quick and straight to the point, but I really recommend that you guys go check out these 3 different sectors. I think they will be some of the major drivers behind the market moving forward and will provide a good profit margin. But if you guys did like this video, make sure to leave a thumbs up and hit that subscribe button if you want to see more videos like this every single week. I'll see you guys next time. Peace.